The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, 12 till 1 p.m. Eastern Time, every market day. Dow's up 18 at 23,535. Let me just go through a couple of things as I do it since it's Technical Friday. That means that I do a little bit more based on the Chapman Wave with all the questions that I get during the week. I'm sorry about this little, this is the daily, the weekly, and the monthly over there. Sorry about the this print over here. It should go away very soon. Let me see if I do this, that, and that. Nope, nothing yet. It stays there. All right, doesn't matter. What we're looking at is the Dow made a new high. You see this black line here? Actually, it's easier for me to do this. You see in the daily chart that I'm showing here, which I show my subscribers every single day, I give a very detailed report and explain what I'm looking at, why we are naming in the Chapman Wave methodology, why we're naming the different peaks, what they are. See, there's an alternate count now on this peak. Why? Two reasons. One is there was a little mini up channel in the Dow daily chart. This is the 9-period. The blue line is the 9-period exponential moving average. The red line is the 20-period moving average. This is a gap right here, and this is the IBM gap from way back. That was the day of the 18th of October. We have not filled the first gap, let alone the second gap. We will fill that gap. When is going to be the question? Bunch of things I wanted to talk about today. I almost forgot about it, and I'm going to maybe forget about it again. So let me just do this right away. One of the things that I want you to show, this is the same chart as that, except that it's magnified. In other words, I'm looking at it 8-9 sessions instead of there's multi-sessions going on, multi-week sessions here. And what it shows is that yesterday's candle was a very good candle. It has the characteristic of what I call the Chapman Wave Roman candle, except it's not red, it is green. It has a different implication. And one of the things about this candle is that if it's almost the same as if it was red, a negative, a high with a Roman candle, or within 2-3 bars of an all-time high, or at least a pretty significant short-term high. Well, in this particular instance, if the Dow had gone at any point today, day's young, anything can happen, but if it had started to trade in the 23,420s, it's 110 points higher right now. But if it had, the implication would be that if there was a candle that followed, that would be Monday, with a very poor candle going under the 9-period moving average of 23,400, almost certainly, because of the MACD being somewhat negative, flat but negative, you would start a new trend to the downside. This particular Roman candle says, I didn't go through this for my subscribers this morning. I just didn't have time, and I want you to look at a number of other things. But the theory here in the Chapman Wave methodology is that if there was a close above 23,005, so what was yesterday's high? 23,531. That would indicate that there's at least another day with an upside move. If after that there's a pullback and you don't even take out the body of the candles low, in this case, it would be the opening price of 23,463 within 2 sessions after this candle, is a very positive action. Now, the MACD started to flatten out and ignored. Even today, it's ignoring this rally because that green line, the faster moving average 9-period differential, is underneath the red. The stochastic went very positive with that candle yesterday. That's what I mentioned to my subscribers. And the on-balance volume is very good. Now, I don't know yet if we have been stopped out. We've got a very tight stop on our small short position. I think we might have. Let me just double check so that I can give you an accurate summation of what's going on. No, we haven't been stopped out yet. I've given it a little bit of leeway, but just a small percentage because it was an initiation of a small short position. Days young, we'll see what happens. And it's at this point the only short position we have. Everything else is long. Now, this is going to be very interesting. You see in the 120-minute chart, we're in a Chapman wave 5 to the upside here. There is a double 5, two ways of counting it. It's in a leg D, possible peak D in this 120-minute chart. It went over the trend line resistance. He has the same thing with the MACD. Look, the MACD is good. And that's what I said yesterday. At the close, once the MACD crossed positive and the stochastic was at 70%, now it's at 88%, that is just not negative action. So it's one of the reasons why I've been very hesitant to increase any of the indexes short any of like the S&P or the Qs or anything like even the IWM. Now let's go through the numbers. So you've got the Dow at 23,530s, certainly that 23,000 level to 22,800 that I said should become a very strong support. At this point, we haven't even come back down. We almost went to 23,000. We went to 23,051 about a week and a half ago, and since then we haven't looked back. This is very good action. I call walking the 9-period exponential moving average. I'm kind of concerned that the MACD and stochastic aren't confirming, but you know what? The MACD, if it turns around and becomes positive from here in the daily chart, that's going to help. That's going to give support to the 23,400 level. So let's go on. S&P before we finish the break. Let's go to this. We've got the S&P at 2583. Is acting very well. It hasn't taken out the old high, so the next 2 days are very important. If it cannot take that and starts to break under 2574, that'll be a negative. Pushing into the 2591 area says, you know what, not yet. And that would imply that this rally should go on a little longer. The QQQ, the NDX 100, trading at 152.61, same as the S&P, except here, the MACD and stochastic are still very strong. And the weekly chart is broken out, and that's very strong. So support is at the 150. It's 152.61 right now. 159.93 is the 9-period moving average. 150.16 would be the next level of support. I want to go to the gold. I'll go to the IWM, etc. I'll go to the XLF, a bunch of those things. But first, I want you to go to gold. You see the way the 9-period moving average on a daily basis has seen a close above it just once since the breakdown of the 17th of October. Every single day it's closed below that. It's tried to tackle it, but even yesterday just stuck a tad above it. That's the one day, and then pulled back. This is saying to me that gold needs time. It still needs time, and so does silver. Gold down 9, silver down 30 cents at 1683. It has very strong 16.60 support going for the next 2 days and a lot of 17.27 resistance. So silver is not that great. High-grade copper, let me just do that, and then we're going to go to the dollar. High-grade copper just had a 3-week consolidation since the peak D top and the daily, peak E in the weekly, and a leg D in the monthly. So watch $3.07. $3.06 is key support, 3.06, and resistance is at 3.17. And now we're going to go to the dollar. Look at this. The dollar has been somewhat relentless. Every time it looked like the dollar was going to pull back, instead what it did is it just went sideways. It's taken a long time now to try to make that leg D above 95.15. That'll be the second buy mode. I think it will do that. Maybe it'll do that Monday or Tuesday. I'm going to watch it closely. The weekly chart has improved a lot. Day is young. I'll be back straight after this. Dow's up 20, the S&P's up 4.5, no, up 4. Basil Chapman, Tiger Technicians Hour. Call in at 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So I just wanted to show this is the dollar. It's holding really well. I think it will go above 95.15. The higher it goes above that, the greater the chance of hitting the 200-period moving average, 95.61. But at this particular point, it's that weekly chart that I think is very, very much improved. Has it improved in the same amount of time? Yes, that's interesting. Look at that. It took from the level that it hit back in, this is the week of 21st of July. It hit 95.35 as a high. And it came down. Let me just do this. I'll draw it in here. Left side, right side. Yep, price time match. Make it green so you can see exactly what I'm looking at here. This is a technique that I developed my CD introducing the Chapman Wave methodology. This is part of the chapter on left side, right side price time match. You can get them in a cup or a V-shaped formation. And look at this. This is a V-shape. Kind of like a cup, but it looks more like a V. Look at that, down to there, down, up again. So it hit it. Oh, it missed it. So far it's missed it by just a few cents, and that in fact will get it to that leg D in the daily. So the price time match had it going until this week, until today, Friday, to get to the 90. What did I say? It was 95.35. Yep, 95.35 high of the 21st of July. The high so far this week is 95.15, or last week, and it hasn't taken it out yet. Yeah, we'll see what happens. But this is a very nice technique. And there's your plumb line right there. And we went long the dollar right at the day of the low, the 70-week low. And retest from 35 weeks up, 35 weeks down. And I'm treating this as a larger counter trend rally, but a short-term buy mode in the weekly, in the daily chart, and I have to wait till to assess today, Friday, if this week started a buy mode in the weekly chart. We'll see what happens. The monthly chart is still not very good looking at all. EUR, USD, and we're looking at the euro-dollar currency pair. Not very strong. It's at 1.16. I think it's going to be testing the the low that was made at the week of the 27th of October. Of 1.157, I think it's going to sneak, just get close to it. And you're looking at the USD JPY, which has had a slightly different chart pattern to the dollar, but now it's a tad stronger. It too it looks like it wants to make a new recovery high. And the weekly chart here looks very good. So that's that. I must see, the TLT, I didn't discuss that. I just mentioned it. is at 125.42. My suspicion is if next week could be a really important inflection week, and here, this is what I'm looking at. A chance that the dollar makes its leg D, and that allows it for the second buy mode to take a bit of a breather, and it comes off the 200-period moving average, and it just chops around. I don't think it's going to break down, but it's going to chop around. That would allow the gold to at least try for another bounce. It doesn't have to be very high, but at least it gives it a chance. But let's see what happens how it holds at 1262 to 1258 support coming into Monday, to see what happens Sunday night. Most importantly, what I'm looking at is that if crude oil has made a peak D in the continuous contract, it is a leg D in the weekly chart. It too, like the dollar, didn't quite make, in this case, April the 14th, didn't make its April 14th high of 55.92, got real close, went to 55.22, 70 cents off 71 cents off, making a new recovery high there, matching the other side. But what's really important about this is that if you go to the USO, which should be the same kind of chart, but it's just a slightly different, it made a peak D. And it too looks like it could sneak a little high, just a little high, and then consolidate. So we're looking at this possible inflection week next week, and that's something you've got to be prepared to act on. And whether it's just a short-term trade or starts a much more a lengthy intermediate-term change, I just cannot say. So, a couple of questions. Amber. I haven't looked at Amberella for I don't know how long. So Bob sends an email, says he's nice volleyball. My last trade was in May. I wish I'd caught September. It is a return to support. Now, I don't know what he means by support because it's making a recovery high. It had an all-time high, Amberella. I just can't remember what they do. 129.19 had a little bit of a pullback. 129.19 was back in July of 2015. Pulls back a little bit to the $33.39 level. I would say that's more than a little bit. Has a sharp rally, about a 1/3 rally, and then it comes back down, has a higher low, goes to about 40.06 in September of this year, and now it's trying to rally. The weekly chart has got the look of, really, this should be 49, 90, 92. This has the look of a single leg A up, but it's actually in leg B. And before it failed in a B minus. So this is going to be very important. But what I'm really looking at, and this is the same characteristic that I was expecting in the Dow and the S&P. Look, the MACD turned down, just like the Dow did. Stochastic was much lower. It's at 77%. Price went higher. And then for 2 days, it pulled back from the doji candle high of 57.40 back on the 1st of November. That's what I was expecting the Dow to do. Let me just go to the Dow chart right now. See, there it is. The MACD pulls back. Stochastic's much weaker, and yet the price goes high. 3 days down, and whoops, back up again. So the price is the arbiter of the trend, and the price so far in the Dow is acting very well. So I'm looking at AMBA, and I'm doing an assessment. I think it's at a short-term top. And I would not be going long. I probably would say with the strength of the weekly chart, I probably wouldn't be going short, but I got a feeling it's going to test. It's at 55.39. It's going to test 54.30s before it tests 56.30s. We'll see. So I'm not quite, maybe I misread what Bob was saying. Let's go. GT says CBL, which is retail, REI. Yep, it's a retail. Got the dividend. Wow, look at that. Yeah, some of these are terrible. Let me look at the IYR for a moment. IYR made a peak C minus. Yeah, it was my thinking is it was a peak F top in the iShares Dow Jones US REITs Index Trust, is the commercial REITs, and it is a peak D already and way below the previous peak F top that was made back in July, August of last year in the 85s, and now you're at 82 something, 82.43. You've gone to a peak D. I'm not sure at this point. Maybe next week I'll say something different. At this point, I don't see it as a short. I don't see it as a buy. I think it's chop, chop, chop until it settles down and shows exactly what it wants to do within 3 to 5 sessions. I think you get a much better trend picture. IYR at 80.58, up 10 cents. I just think it's chop, chop, chop sideways for now. So I didn't really answer that question, did I? Oh, SPG. I haven't looked at SPG in a long time. SPG is Simon Properties. You know, I don't know how many times I've notated this. I don't know why it disappears. Oh, it became an IPO again, A, B. It went to a peak C minus because this used to, they did something and they changed the chart. But I had this going back decades. Anyway, it's trading at 156. It looks terrible. Down 3 at 156.27. Really doesn't look good. A, B, C, D, E, peak E in the weekly chart. No, doesn't look good. Next question is the comp index. So the question is, oh, we've got a break coming up. So the question is, euphoria loss seen since 1999, party like 1999. I don't see that as even close. I'll talk about that when I get back. Comp index. I'm talking about the mass hysteria that we had at that time. It's not. I wouldn't even say it's close. It hasn't even come into the ballpark.
Platinum,
in terms of
grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yeah, so there was a statement about the comp index. I just have to tell you, I don't see it right now. I don't the euphoria. I remember playing tennis in this club, indoor club, being miles away from the monitors. Not quite miles, felt like miles, and yet you could still see the Dow, and you could see every. I remember counting out of the 12 monitors in the gym. There was one that was not onto a financial news network, and that one also had at the bottom a little ticker that was scrolling by. and with the price of I can't remember if they had the price of the Dow or the price of the Nasdaq. They used to call them over-the-counter stocks. So this isn't even. I mean, I'm playing tennis with people, all of whom would normally be in the stock market and talking stocks, and not a single person is talking fresh, like a tip. I haven't heard anybody give a tip in I don't know how long. Maybe it's just a circle that I mix with. All I can say is that I don't see anything even close to that. Now, as far as price is concerned, where's that chart? I took it from Larry Pesavento yesterday. He showed it, and I thought, wow, that is really illustrative chart. Look at this. What he showed was this particular chart here, which said large speculators' biggest bet ever on a rising Dow. And I spoke about this. Time flies, so maybe it's more than a year. It's at least a year, but I've been talking about the Dow for, I'm pretty sure it's at least a year and a half. I've been saying the mix in the Dow for this particular environment is the most perfect the Dow has seen for decades. Because even in 2000, the Dow topped out. My newsletter at that time had a price projection of 22. I had a price projection of 17 to 19,000. In late 1999, I raised it from 19,000 to the 22,000, maybe even 24,000, and it was on the top of the newsletter. And I remember at some point I was being monitored by one of the agencies, to Time is Digest, one of those, and the market then went down. I said, "Oh, the Dow has made a serious top in January." Then when in March the Nasdaq made a top, I said I would not be surprised if in my lifetime we never see these prices again. But I never took the heading off because I never even read the heading. I just did my newsletter over and over. It was a very detailed, like today. I never changed it. And then one day I said to myself, "That's ridiculous. The market's getting way lower. I can't have this now. The market go way lower first." So I took it off. And I wrote to them to say, "No, I'm changing it." And they said, I don't remember what they said, but I said, I don't need to be monitored, because I saw how they monitored people. There was a guy who had been calling for the Dow, trying to recall whether he was the major bear or if he was a major bull. But whatever it was, years went by, and I saw that his name was still there because the market had gone down, but it actually had gone up 40%. How do you measure that and still keep a record of everything? So I decided to be monitored is just not the way to do things. You just got to do the best you can. So this is the perfect time for the Dow. You can see even now the Dow is outpacing many of the other indices, because it has 5 financials in it, and that's really makes quite a difference. So what I'm looking at here is that this is a record high. So I said Larry Pesavento showed the chart during his show. I will discuss this in greater detail over the weekend, but it is worth perusing and contemplating. And that's all I want to do with it, because, hey, it was the same thing there, it was the same thing there, it was the same thing there, and it still kept going higher. So these things can become extremely overbought, but it's something to keep in mind. So I just wanted to show that, and all I'm saying is that I don't have a signal yet in the Qs to say, or the Nasdaq comp, well, the comp slightly different to the Qs. Where did I go? Type it over here, 1, 2, 3. Except that the Qs are in leg D. In the monthly, the composite index is in leg C. Oh, and so is the power shares. No, let me do that again. Comp index is in leg D in the monthly chart, and the QQQs are only in leg, and the NDX 100 is only in leg C, and that makes a big difference. But look, slightly, the comp index went higher, and the QQs kind of stalled a little bit under the previous high, just a little bit so far today. Okay, enough with that. What I want you to do is this. XLF, and I think this is going to be important. What I'm trying to do is to set up a webinar coming up in a few weeks' time, because I want to be discussing what happens to interest rates in 2018. What is there, inflation or deflation? You know that when inflation finally kicks in, when the Fed finally recognizes that's inflation, you might see inflation like you've never seen inflation since the 1970s, or maybe even worse. because they're always behind the eight ball. They want to be not proactive. They want to be post-active in many ways. They're waiting for data to come in. But at the same time, this whole disinflationary aspect of commoditization of everything. Remember, I just constantly talk about automobiles. You can get a most incredible car in the 20,000s, or you can get, incredible in relation to what we had seen 10 years ago, just in terms of safety, in terms of efficiency, in terms of a whole bunch of things. And yet I'm very disappointed in reading how some of the headlights are not as strong as they should be. All right, that's something else. At the same time, you could go for the same measurements of vehicles, same space, same 2 doors, 4 doors, whatever it is. You could spend 3, 4, 5, or even 6 times that amount very easily. But that's your choice. And that's what the commoditization is. India, Taiwan, you can just go through all these different countries, China. Everyone's competing for your dollar, for whatever it is, your pencil, your pen, your computer, whatever it is you're buying. Countries around the world are competing on price. And that, in a sense, is deflationary. So I would love to have a webinar based on that. I want to talk about the politicization of what's going on as it relates to the market, not just politics. I don't need a webinar on that. Just so many factors. What's working, what's not in the stock market, this whole socioeconomic thing, the fads that are going in place. Anybody wear a hat backwards anymore? In fact, do you ever see, it was adults that started to wear peak caps. You see people wearing peak caps anymore? Fashions change, and they change very subtly. I always look for them. I remember from the age of 4 and 5, I was always looking for trends. That's what I didn't set out to do, but it's something I always did automatically. Whether it was the wood, the paneling on those station wagons. I hated the paneling on the Willys Jeep. People might love it. I didn't like it. And I was just a tiny little nipper at that point. And I said, ugh. So these are things that I look for. And it's just it's something that I think is very important. What I'm seeing in Brooklyn, what I'm seeing in the Boston area, all around the Northeast, when I drive through Connecticut, wherever I go on the Northeast, and what I read about on the Northwest and in many cities around the country, we are going into a glut of real estate. I don't mean just excessivity, I'm talking about a glut. There's a big difference. I'll be back. Basil Chapman, Dow's at 28. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active exclusive trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
We're back, folks. So I wanted to do a couple of things. First of all, the 10-minute chart has gone to a leg D. It went to a peak D with that big spike, early morning spike at 8:40 this morning, went to 25.8125. Then it dropped pretty sharply for a down move these days. Went to 25.73.50 at 9:50, and then started to move. Went to peak A, peak B, peak C, leg D. Remember, we always look for Ds in the Chapman wave methodology. Yes, you can go higher, but D is really the objective. So this is very interesting because I don't see the MACDs still expanding. And the stochastics at 92%. That's very strong. If it flattens out, that just gives you tremendous support at the 25.80 to 25.78 area. So we'll see what happens here. We'll see if we get another one of those Friday strong finishes. Who knows? Anyway, so the XLF, leg E, it's actually a leg E in the monthly, but we haven't made a new high to extend that leg E into November yet. No, we did. Yes, we went to 93. So this is leg E in the monthly. So you've got to wait till January before you can get a confirmation that the whole of December is down, and that January will confirm that there's a peak E. It takes that long to confirm. That doesn't mean to say the short-term trend couldn't change quickly. I'm just saying monthly charts take a while to unfold. But the weekly chart is in leg E because of that 0.1 extension over last week's high. So this is still an E. The MACD is good. Stochastics flat at 95%. That is very good. So the XLF has walked the 9-period moving average, has tested a whole bunch of times, just like a little bunch of birds sitting on a tree right there. And then pop, it tested again today, closed yesterday well above it. And today it tested the 9-period moving average, the black line of 2670, and now it's at 2679. So far this is good, but the MACD is not good and the stochastic's failing. So I would look at this pattern and I'd say, you know what? I'm looking at an oval pattern, and it has a number of characteristics right there. If that low of yesterday was lower than the low of the 25th, 2650, I would have said, nope, it's a rectangle formation. This is an oval pattern. It says, yes, you could get one more pop to the upside to get your leg D, and then retest at 2670. And at that time, you're going to be looking to say, hey, is this about to break down, or is this a good action? What's going on? So XLF at 2681, down 8 cents, not bad action. Now let's go to the question about, what was it, XLF? Where did it go? Oh. Wait. Oh, there it is. AIG. I haven't looked at AIG for a while. AIG used to have it all notated, probably not notated. I don't even understand how that happens. So we've got an A, Right. So you've got 61.23, 61.19. So that's A, B, C, D, E, F. F top right there with the down arrow. AIG is in a consolidation, was in a consolidation, it's breaking down right now. It's under the 200-period moving average at 61.98, down 3, I didn't even see that, down 4.62%, not good. Something's up there. AIG is American International Group, various insurance, A, B, C, D, E, peak E in the weekly chart, trying to recapture that, failed and went to an AB. I don't know if it's going to be a B minus, but in the meantime, the 200-period moving average in the weekly at 65.63 repelled it. You know what? I'd like to get the notation down. I'm going to put it down in my notes. I'd like to do this AIG. I'll make a note for Monday. I'll do it on Monday in greater detail because I can't find my book. Oh, it's right in front of me. AIG. AIG. Question mark. Good. Okay. So that'll be for Monday. I hope I can do it by Monday. So let's go on. Question about some of the other financials. Some I haven't looked at for a while. Yep, you've got Bank of America. This is what we are still long, expecting a pullback to add to. Haven't added it yet. It's trading at 27.47. It's down 14 cents at 27.73. TNX was the next question. TNX, which is the 10-year yield. A, B. Now, this is going to be interesting. This has all the characteristics of an F. I'm putting it in here as an F with a little inverted V to show that down arrow was correct. The MACD did come back again, but it's failed, and this looks to me like a right arm extension failure pattern, and it's a leg B in the weekly chart, still not too bad. Okay, so the TNX, I'll give you parameters to look for. The TNX, at any point in the next 2 weeks, if the TNX takes out 24.80, it's at 23.47. That's a really big move to the upside. Something's going on inflationary-wise, but more likely what I think is happening is if you look at the TLT, the TLT is suggesting it wants to go higher and that bonds could be coming down, bond yields could be coming down. That's kind of the way I'm looking at it right now. And I just want to stay with that theme. And I'll just make it real clear. If the TLT closes below 123.90 in the next 3 sessions, then you're going to see that inflation reaction with TNX going quite a bit higher. But if it goes to the 126s, which is kind of the way I'm looking at it, that's going to suggest yields are going to go back down, and they're in a trading band going towards the lower end of the band right now. So that's that. Next question was RLGY. RLGY. So RLGY. Trading at 27.82, down 2.56. Have you noticed, folks, that some of the charts that I've shown today have been decimated to the downside? I mean, here's one down 8%. What was the one that was down 21 or 22% yesterday? Oh, first of all, this is horrible. This is Realogy. I've never loved, like, there's certain names that I've, like Alphabet. It just irritates the heck out of me. I can't even say it. This is another one of those. RLGY, 27.82, down 2.57. It shouldn't have anything to do with me, but it's personal. Minus 8.46%. Realogy Holding Core. This is obviously some kind of a REIT, I believe. Residential brokerage. This is really ugly action. And I guess it has to do partly with the tax bill, but it was already on its way down before, made that peak G top at the 200-period exponential moving average in the weekly. This is in trouble. This is just not good. Oh, talking about trouble, I just wanted to have a look at gold. You remember we had a call yesterday? Yeah, it's done exactly what we spoke about. I'd say take a little bit off. I wouldn't be surprised if there's an inside bar, meaning the low of yesterday isn't taken out, but it doesn't do all that much to the upside, but it will give you a chance to maybe exit a little higher if you want. I'm looking at this and I'm saying, you know, this is just not a good chart. GOLD at 90.72, up 14 cents. Nothing's changed in my thinking. You took a little bit off, I hope, and I really would like to see it rally towards the 92.5 to 93.25 area, and then I'm going to say take another little bit off, and then just you can hold the rest for a small position. I don't like this chart one little bit. This is Rand Gold, trading at 90.72. IWM, as we're going into this break, IWM is trading, it's in a range. You see, this is one of the frustrating things. A stock or an index that trades within a range can stay in that range for a long time, especially if it's a rectangle. This has begun the rectangle formation after having the falling axis open, expanding, a wedge formation, stall, and now it's trying to rally, but it's stuck. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So we were looking at the 10-minute E-mini. It got to that leg D. That's where you expect other things to happen. Well, it's sort of stalling here, so we'll see what happens this afternoon. Just make it real. For me, it would be pretty clear that if the stochastic at 89% continues to hold in that 88 to 91% area, then any push above 2580, somewhere around 2583.50 would say, hey, it could be a very nice close. But if there's a slide below 2579, it says, okay, most of the move is done for the day, just resting going into the weekend. So let's do this. So IWM is in a trading band. The candle of 3 days ago, where we went to 150.53, just 15 cents off the all-time high, says to me, you can block out below it and make a rectangle formation, and that should be the rectangle formation for at least 3 upcoming days. And that says that the resistance so far is going to be above this candle high of 149.23. I'd put it at 149.56, and the support at 150. 147.44 is going to be critical to hold. And I think it just might chop for a little bit. We'll see. Okay, that's IWM. And the weekly chart is still actually pretty darn strong. Not the unbalanced volume. That's pulled back a lot. But it is making a very interesting triangle with a flat top and a sharp decline at the bottom. That says if you do break out to the upside, it could be a very quick, sharp move. But if you don't, you can be stuck in this range for quite a while. So, okay, let me do this as we're about to wrap up. The VIX index, right there, trading at $9.27. This is just saying no interest whatsoever in fund managers in buying insurance. So this is part of what I'm looking at. Now, I'm going to do this. I'm ending today right on this particular note. I'm showing you a long-term daily chart of the Dow. And I want you just to look at this, and if you have a chance to review it over the weekend, look at this chart. You can go to your own chart. You see that very flat 95, 97, 98% stochastic? You see how we're starting to dip? You see the way that it's expanded, but it's only at 89%. You see the MACD flattening out? It would not surprise me if we are getting really close to some kind of a pullback, which might turn out, because of the MACD and stochastic, to be deeper. Have a great
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.